Successful traders always follow the line of least resistance. Follow the trend. The trend is your friend. Jesse Livermore and friends. Jesse Livermore is who I dedicate the new book to. I've been working on it for many months, and for our Patreon members, I'm going to start releasing chapters of it to ask you to take a look at it, help me proof it, make recommendations as to what you don't see in that chapter that you think needs to be included, things that make sense, things that don't make sense. I'm asking for crowdsourcing. And again, appreciate all the Patreon members. If you're not a Patreon member, go ahead and become one at any of the three levels. First thing you get is Options Made Simple, the Charting Wealth Way, 3-part series. Super popular. It is extremely, I just have to say it, some of my best work. And it makes options simple, helps you understand it, gives you practical guidelines for employing them simply and using them effectively. And you can practice trade to your heart's content. Let's jump into these charts. Everything down for the day except gold, and gold is up nicely. Let's look at the S&P 500 as we start. Now we see last week we hit a high of 524.61. The week before, 524.11. This week, 524.38. So we've not gotten to the high of last week yet, and we are down for the day 0.78%. Does it mean things are finally going to be rolling over? I don't know. We sort of thought that could be happening back on January the 2nd, right after the Christmas run-up. But things just pulled back and then took off again because we're printing money backed by nothing, spending. I don't even say like drunken sailors. I used to say that old adage. But you know what happens when a drunken sailor runs out of money? He's done. He can't just reach in his wallet and create it out of thin air. But that is exactly what we do. So, of course, real things like stocks and companies, they keep going up in value. Why? Because you're printing more money backed by nothing. So something real, if it has more and more dollars chasing it, of course, the price is going to inflate. So at some point, though, everything has to sort of roll over. And today, we're having a bit of a down day. You can see it. It started a little bit yesterday afternoon and then ran on down strong in the morning, sitting right there on the weekly trend line on the 2-day chart where we can see intraday in the morning and the afternoon. Remember, 195 minutes is a half day. It is a market opens at 9:30, closes at 4. So that's 195 minutes, divides it. Now let's look at what's up with the 2-day candle. This first day of the latest 2-day candle, pushing through the weekly trend line. It could change before the candle finishes drawing tomorrow, but right now, seeing some significant weakness. Look back in time over the last many weeks, going back to, literally the 17th of January. Well, we did have a spinning top back on the 14th of March. But again, not a red down candle. We have to go all the way back to the 2nd and the 4th of January. That'd be 2nd, 3rd, 4th, 5th. On the 2-day chart. So again, we will keep an eye on things and see how it goes. You also see that since the beginning of the year, this is only the 3rd red volume that we've seen. And red volume means that the candle opened lower than the prior close. That's all that means. It doesn't mean there's negative volume. Okay, so that's the way we have our chart set up to be able to show us that. So we're down for the day. Some warning bells are going off now. Of course, we don't know yet what's going to happen. Things could boom up tomorrow, but we have some significant pullback. Now, we've seen that happen before. We saw on Friday, the 15th of March, down in the morning, down in the afternoon. Then what happened? Things shot right back up again. We saw things again down in the morning, down in the afternoon on Friday afternoon and Monday morning back on the 8th and the 11th of March. And then we saw on Tuesday, the 5th of March, down in the morning, down in the afternoon. So we'll keep an eye on things, not calling it quits yet, but we are questioning. Let's look at the NASDAQ 100. It's weak, just a little doji there for the week. 2-day candle pushing strongly through that weekly trend line, and the half-day jamming through it in the morning, pulling back up a little bit, not so far down in the afternoon, but overall right now, down almost 1%. I'm coming to you a few minutes before the market closes. Now, let's see where we are on 20-year bonds. They are down again. We saw them strongly down yesterday, down again strongly. Look at all the volume in the mornings there on Monday and Tuesday. And again, we had high volume on the prior 2-day candles. And of course, this latest first day of this latest 2-day candle, not up to half the volume yet, but see what happens tomorrow, but a big down candle. So again, waiting to see what bonds are going to do. And right now they're leaning toward down. Now gold, the opposite, my friends. Gold, turned over, heading up, really didn't give us any kind of volume ascent until the 4th of March. Then that volume kicked in, and we had decent average volume for the next 2 candles, but trying to get as high as that prior candle. Finally did on that second week after things topped off. That was the 4th of March where we had that really high volume. Things peaking up to 203.30, the next week 202, and then 203.92 the week beginning the 18th of March. And then things jamming up since then. For today alone, 1.28%. Gold is just moving up quite nicely now. And again, still long gold above on the 2-day and the half-day, above that weekly trend line quite nicely. Now, Bitcoin, just the opposite. Bitcoin, again, we talked about this, and I'm really interested to see if it does play out. Because as we looked back in time on our 24-hour-a-day chart, we didn't see anywhere where Bitcoin had jammed up and then really blew off that up move, dropping way, way back, and then trying to pick up again and move forward. We had a spinning top here on a weekly, and again, tried the next week, that'd be the week, last week, the 25th of March, to get back up to where it was, didn't make it, and now we're back to another spinning top. And it's hard to even draw much of a trend line. I mean, that's pretty flat if we go with the last 2 weeks. If that is indeed what we do, we are trying to, stay up above that. We're down for the day alone, 5.37% on the 24-hour day Bitcoin. On HODL, HODL, that is the VanEck Bitcoin Trust, we're down 5.55%. So again, a pullback, a big pullback on Bitcoin for the day. Now, the 2-day has reverted back over. We saw the 2-day pullback back on the 18th of March, 19th, 20th, 21st. We saw on those 2-day candles 4 days and just laid on the trend line and then moved back up. This has penetrated the trend line again, and we'll see where that leads us to. I'm hoping to see a red down candle and let Bitcoin reset so that when it does start to move again, hopefully it'll give us a nice clean signal, an okay signal as it did this last time, and again, give an opportunity for those who did not get into a practice trade on Bitcoin to get into another one for the up move. Although, as you guys know, Bitcoin tends to jam up and then slam around for a while before it garners energy to get back up again. If this is the total move. Now, we'll wait, we'll watch, we'll see, we'll let the charts tell us what's actually going on, because as always, time will tell. That is where we are, folks, on Tuesday, so appreciate you being with us. Always love to hear from you. CW@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.